Welcome to Investor Unchained. I'm Jason Hennessy. Today I want to talk about a unit renovation I recently completed. The owners were looking for $230,000. I ended up paying $185,000, get that equity straight away, because $230,000 was a fairly reasonable price for this area. 2 bedrooms, 1 bathroom, large living area, large kitchen, and I took advantage of some of those zones through the renovation, as I'll show you later in this video. So the original market value for the rent was $260 a week. It's a very simple brick building. There's no bells and whistles, there's no elevators, no pools, keep it very simple, keep it body corporate, very cheap. The expenses for purchasing the property involve the stamp duty, which costs $4,965, conveyancing, inspections and other legal costs, $1,550. The mortgage expenses cost me about $136.30, and I always like to put a 20% deposit on my properties. That just avoids lender's mortgage insurance, which saves you money in the long run. It's essentially wasted money. It's not insurance for you, it's insurance for the bank in case you can't pay. So I put a 20% deposit down, and that was $37,000. I put a lot of elbow grease into this. I spent about a month just ripping the carpets up, gutting the entire place. I hammer drilled all the tiles up, pulled out all the light fittings. I just destroyed the place. I tore it to pieces. Rebuilt it from the ceiling down, painting the walls, painting the ceiling. We installed fans with lights. We put all new floating floors in. We moved the kitchen out to build another bedroom. So it turned it from a 2-bedroom to a 3-bedroom place. This adds massive equity to a renovation. Structure inside, fantastic. As long as you're not knocking out any structural beams, structural walls. All up, I spent $18,299.42 on mostly materials, a little bit of labour here and there. I did get a sparky and a plumber to make some adjustments for me, also to install the oven. Anyway, I'll show you some of the before and afters. So here are some of the before. As you can see, very old. Very old tiles, very old paint. I tore it all out and added all new flooring, new tiles, new light fittings, new power switches, pretty much new everything. Everything you see here is basically brand new. Now, I've recently had the place valued. It's now worth approximately $280,000 to $300,000, and after expenses, I'm looking at a profit of about $70,000 to $90,000. I'm looking at keeping this apartment. It cost me approximately $250 a week. That includes mortgage repayments, body corporate, council rates, and the new market rent is about $350 a week. So you're looking at about $100 a week, nearly, give or take $5,000 a year in profit each year. Or I could go the avenue of living in it for 12 months, and because it's my primary residence, I won't get any capital gains, and I could sell it and get that 70 grand. Or alternatively, I could get it refinanced, pull that 70 grand out and go buy other investments. If you guys are just getting started in property investment, I'd recommend a good book called Value Investing in Property. I'll put a link below on details of the book. It's a great book. It gives you some strategies and ideas on how to value invest in property. What would Warren Buffett do if he was buying property? Buying near cities, buying below the intrinsic value, what the property's worth. Really looking at what the investment is. You're looking at the land, not the actual amenity on top. And yeah, it's a fantastic book. So like I said, I'll put the link below. Don't forget to subscribe and shoot me any questions, and I'll talk to you guys soon.